What's up guys, Kate here with another cryptocurrency update, diving into the XRP price chart on the 3-day time frame versus the US dollar. I love looking at the macro, focus on the monthly, the weekly, or even the 3-day. Now, we're going to draw a Fibonacci retracement looking at the previous all-time high back in November of 2013 for XRP when it was only around, let's say, 6 cents. To the low, we have a wick down here, we have a wick down here, a wick down here, and a fourth one right here before XRP did that big crash and then finally went on its parabolic rise. So all we're going to do is swing high, swing low, and go to the all-time low, okay? We're going to drag all the way over. So now what's interesting about this is, of course, from here to here, we did in fact reach a 4.236, again, consolidating, forming another bull flag, and then shooting all the way to the 34. So if you guys caught the video yesterday, this is kind of a continued version. Now, after reaching this full 34 extension, like we've seen many assets do on a multi-year time frame, what's it doing? Forming another cup. We backtested here approximately the 2 Fibonacci extension, and funny enough, it's right around these levels and this wick. And then thus far, we have yet to surpass its previous all-time high price. The all-time high price for XRP was approximately $3.84 on the highest exchange. Other exchanges is anywhere from maybe like $3.30. Now remember, at this, we can see we came all the way to perfection, the 34 Fibonacci extension, just under $2, $1.96, $1.98, pretty damn close. So very interesting. Now keep in mind, if you're comparing Ethereum or even Bitcoin fractals, they form multiple cups, and where have they reached? Well, Bitcoin and Ethereum have reached up to these higher levels. So this is something I'm paying attention to for the longer term for XRP, XLM, a lot of assets that have yet to surpass their previous all-time high. And it's always interesting to see some of these crazy wicks or periods of liquidation right before they go on a massive run. Even looking at the Bitcoin price chart, we can see from this high of 2013 to the low, we reached a 21 Fibonacci extension, and then again, actually creating bottoms on the 34. This is all the way back from 2013. So these fib levels absolutely help with price discovery. Now remember guys, the time to be bullish on Bitcoin was before and shortly after the Bitcoin halving, right around this level. That's the time to be bullish. And that doesn't mean Bitcoin doesn't go up in the future. What I'm saying is I'm much more comfortable swinging the bat on assets that are at lower retracements where they have that 10x potential instead of maybe a 2 or 3x potential before creating a new all-time high price. Now looking at these levels for Bitcoin, just a quick reminder for anybody new, from the high to the low, and you can see, swipe over. Bitcoin at the very least has done, look at this, a double top on the 3618 Fibonacci extension. Now this is not the only asset. Some assets have reached all the way up to a 34, some have reached maybe an 8, some have reached a 4.236. Point being is I want to buy assets when they're at lower retracement levels, and then when they do finally run, it's a lot easier to just stagger sells out. Well, let's compare XRP from the high to the low. Where are we? We're still below the 236 Fibonacci retracement. Now, the point of this video is not to bash any assets in particular. It's simply to encourage people to look at assets and focus on the ROI and percent return potential. So now looking at Bitcoin, you can see we absolutely rocketed. We had a huge crash and then finally reached these golden extensions. Now, I have some friends and well-respected people that believe that a lot of assets are still going to follow this move and crash. And if it does, I'm going to buy more, but I'm not risking my long-term holdings that I've been accumulating for years to try to sell and buy back lower. Now, for anybody brand new to the channel, let me give you a high-level overview of how I manage and rebalance my crypto portfolio. So this could change depending on when we're in a bear market or a bull market. And right now it seems like the market is 50-50. But what I want to share is this. So I have long-term holds, I have a trading bag, and then of course I have a cash position. And a cash position is simply an insurance policy because when I'm buying an asset, let's be real, you're most likely never going to buy the exact bottom or sell the exact top. What we can do is of course profit and capitalize on what happens in between all of this volatility. Now, I don't gamble with my whole bag. That's far too risky. If I, let's say I sold all my XRP and I was trying to buy back lower, it's possible that I could win, but it's really a coin flip. And I just do not want to risk any holdings that I've been accumulating for several years at this point on, a big trade. If I got lucky early on with a few big moves, I'm holding those bad boys because I don't want to just ruin everything I've worked for. So what I do is long-term holds, trading bag, and cash position. Typically, I'll try anywhere from 30 to 50% of my entire crypto portfolio in a long-term holds, depending on where we are in the market. So long-term holds could mean an asset that I believe has real development, billions in funding, has a real roadmap, real partnerships, and I feel will be here for the long term, whether it's 3, 5, or even 10 years. Okay? And what I do with those is I really just set and forget. They're cold storage. storage, I have some alerts that are set, and I'll get an email when those assets hit those price points. And for example, you could have 2 or 3 take profits, selling 25%, 25%, 25%, and then holding the remaining 25% of said asset for the long term. Okay? So that's one way. Then I have a trading bag. Now with this trading bag, it's approximately 1/4 of my crypto portfolio, about 25%. If I ever make a killer trade or do really well, and then it becomes 50%, I'll actually rebalance some of those profits and take that and put that into the long-term holds, or my other component of the strategy, my cash position. Now this is unorthodox, and I recommend you find something that really caters to your specific needs, but this has been working for me for the past couple years in crypto. So long-term holds, let's just say 50%, set and forget, have a few targets, hold a portion for life. I have my trading bag, which I'll try to do with some active swing trades, work the market. If an asset like say XRP rockets up here, whereas my other asset is still down here, I'll take those profits of my trading bag and put it down here and get another ride. And it requires waiting, but it has always been profitable for me over the long term. As I showed in that one video a couple months ago, in total, that was a 16x return by just compounding my wealth and waiting months in between each move. And now I'm sharing this because I know a lot of people on their journey, let's just say you have $10,000 in crypto, you definitely sometimes get tempted to trade all of it and gamble all of it for a big win. And I speak with experience. I've had huge losses early on. And because of that, some of the most painful points in my life, at least in terms of finance, I said I will never do that again. My risk to reward will be relatively stable. And if I want to trade, I'm only going to be trading with a portion of my portfolio. So remember guys, no strategy is perfect, but some of the best traders, some of the best investors that I know, they play both sides. What do I mean by that? Well, I have long-term holds, so I have exposure in the market if we just keep going and finally do climb at these higher levels. I also have a cash position, aka my insurance policy, because if assets ever do a huge crash yet again, which typically crypto does every few months, you'll see multiple 50% crashes every single year, sometimes 90% crashes during a bear market, I will simply have the cash to at least improve my position. Let's say I'm buying an asset at $5 and now it crashed to $1. I can absolutely unload on that $1 price point and get my overall average buy-in down to $2 or $3. And at the end of the day, when that asset finally awakens, I've just made so much more money because I bought as low as possible and kept faith and held long term. And of course, my trade position. So I'm watching between Casper and API 3, whichever one does in fact go and reach some of the higher levels and does a 3x, 4x, or even a 10x, I will take those profits, whichever one goes first, and I will put it into the next asset that has still the highest ROI. And for me, this strategy has been one of the most profitable ones when all is said and done. Of course, all the noise comes out and toxicity when prices are crashing and low, but of course, that's when I am buying and accumulating. And of course, after the asset finally awakens, the volume comes, the asset does a 5 or 10x, all the toxicity on Twitter, all the haters, crickets. And my favorite component of all of this, and I know it's very unorthodox, is having a cash position. Now, when I mean cash, I can mean US dollar. I can mean US dollar sitting with Caleb and Brown, an OTC broker that I leverage, linked in the video description. I can have a limit order set for any crypto with that exchange. Because I personally feel that it's a little risky putting millions of dollars on some centralized exchange that is not secured via cold storage. So I am a bit more nervous, say, having millions of dollars or $100,000 sitting on KuCoin, when in fact regulations can come at any point. Caleb & Brown is an OTC broker, assets are in cold storage, and they're connected to the top liquidity providers and LPs in the space that directly connect to Coinbase, Binance, KuCoin, all the same LPs. And for anybody that's a US resident leveraging Gate.io, that exchange, please be careful because starting in April, they're going to start closing your accounts. You have to remove any crypto you have on that exchange. I know we like using that exchange because there's a lot of gems that are listed there before they're even on KuCoin. But if you do not get your money off that exchange before April, you could lose all the money or at least have a very difficult time getting it back. So please be safe. Or I could be on a centralized exchange and leverage, KuCoin or Coinbase and set some limit orders and have USDC, USDT, or just US dollar. And now I try to keep 25% of my entire portfolio in cash. Kevin, why do you do that? Because I know I'm not going to buy the bottom, and I like having an insurance policy if markets ever just go crazy, just like we witnessed, really just a month or two ago with Bitcoin, some of the biggest liquidations we've ever seen. We were at a $3 trillion market cap last year, and we're down under $2 trillion. So with those huge liquidations, let's see. So yeah, we're at $1.9 trillion. Now we're on CoinGlass.com looking at the liquidation data. I mean, you can see hundreds of thousands of dollars, if not millions of dollars that are liquidated on a regular basis. Looking at other assets, even QNT crashing 85%, 70%, 90%, 40%, 58%, 40%, and then an 80% crash. We have to understand that crypto's volatile, and although QNT from its all-time low did over a 100,000% move, there's crashes on the way up. So if I simply just have a 25% cash position and I only deploy it after an asset does a 50% or 70% crash, I still think that's going to be a good entry even if the asset goes a little lower before reaching those higher prices. It helps me personally just improve my dollar cost average. And so then say my cash position is 25%, markets crash 50%, and I want to throw a little bit at it, I will. And as the markets retrace, when they do, what I'll do is whether it's my trading bag or my long-term holds, I'll take those profits and I'll just put them right back in the cash position, trying to keep a 25, 50% split. And of course, this changes depending on in a bull or bear market. And remember, guys, this is a strategy that just works for me. I'm always trying to change it. I keep an open mind, and I'm always willing to adjust it depending on where we are in the markets. There's a lot of great minds in the space that have different take-profit strategies, different rebalancing strategies. So I encourage you guys to really listen to everybody, whether in the stock market, the crypto market, anything in between, because we're all just trying to do the best we can with what we have to improve our situation. But all right, guys, that is enough out of me. In the next video, we're going to be doing some rapid fire news, going through a variety of altcoins, including XRP and HBAR. I hope you enjoyed this one. We'll touch more on this in more depth in the future. Be sure to like and sub, and until next time.